All right, welcome to the weekly prep video for the week of September 2nd to the 5th. Just a quick reminder, the market is closed on Monday for Memorial Day. In this video, we'll be taking a look at the action over the past week of the indexes, liquid leaders, industry ETFs, then end the video with long and short setups going into next week, like we do with every weekly recap. So if you guys enjoyed the video, please leave a like and subscribe to my channel. And if you want my market takes throughout the trading day, along with a live stream at the market open, you can sign up for the Discord using the link below. We are running a little promotion over the weekend where you could try it out for a full week for just $30. And if you like it, you can sign up for the monthly or the yearly subscription. Getting into the indexes, weekday on Friday from the NASDAQ, we had a gap down, closed below the 5, the 10, and right at that 20-day moving average on a pickup on volume. Most of the weakness came from Nvidia and semiconductors, as Alibaba, one of the larger companies in China, reported that they were going to be creating their own semiconductors. So that obviously hurt the market a little bit, but still only down 1.2%, finishing the week basically flat. Hopefully, this is just a higher low in the overall structure, and we could start to see volatility contract a little bit. But all of August was lots of volatility with very little price appreciation, which is usually a pretty tough market to trade in. The S&P 500 also had a gap down on Friday, closed under the 5-day, but you could see the relative strength compared to the NASDAQ. The S&P 500 only down 0.6%, bounced at the 10-day, closed right at the 5, where the NASDAQ was down 1.2%, gap down and closed under the 5, the 10, the 20. So obvious rotation away from mega cap tech stocks to the rest of the market, which isn't inherently unhealthy. The growth stocks of the Russell 2000, which we can use IWO to track that. Good day, or sorry, good week overall. Friday, a little bit weaker with a bearish engulfing candle, but doing so on lighter volume and still closing over the 5-day moving average, down 0.9%. Finished the week exactly flat. And then ARKK, a little bit of weakness here, back through the 5, the 10, the 20-day moving averages. Closing under that 20-day is a little bit of a warning sign. Finishing the day down 1.4%, finishing the week down 2%. But still, this could be just another higher low in this overall base. And I really like how this is setting up. Like we've been consolidating here since middle of July. So as long as we don't like break the 50-day moving average on volume and we can just put in another higher low, overall the structure of this looks fine to me. And then finally, taking a look at IBIT, IBIT as a way to track Bitcoin. Obvious weakness here. We had that false breakout into highs on August 13th, and since then have just been selling off. Last Friday, we had a nice move back through the moving averages um, because of Powell's speech, and that was just immediately erased over the weekend. Opened Monday lower than the lows in the pullback, mini rally midweek, and then Friday we had a big sell off. And still, we're just kind of checking back to this breakout point, but the immediate failure on new highs and then immediate failure after good news last Friday, not usually a good sign for the stock. So short term, now this isn't a downtrend. The 20-day is sloping down, getting below the 50-day moving average, and just general weakness overall here. Getting into the liquid leaders, before we start with that, I did kick out Uber. I not doing anything horribly wrong. Closed above the 20-day moving average, but had the shakeout of the 20 and the 50-day. Just not acting super strong, so I added APP instead. So we'll just sort this from price percent change for the current week, talk about the best, and then get to the worst names. So best name, BE. I would say the best stock in the market right now. Just incredible strength. Continues to ride the 5-day moving average on extensions to the upside. And then whenever you have a contraction or a pullback, it gets supported at the 10-day moving average. Only minor issue was the gap down on Friday, but still closed above the 5-day moving average. Did so on lower volume, finishing Friday down 3.4%, but finishing the week up 9%. So Bloom Energy, probably the strongest stock in the market right now. APP, the new addition to the list, with software names starting to come back in. We had NET, um, Snow, Snowflake had good earnings, MDB had good earnings. I'm sure I'm missing a couple others, but with software names starting to kick back into gear, I wanted to add another software name to the leaders list. Went with APP, finishing the week up 8.4%. Friday down a little bit, but really tight consolidation, a little bit more volume than you would have expected, but it was a month end, so maybe some rebalancing there. Still closed over the 5 day, really tight action price wise. And unfortunately, I got stopped out of this name when we lost the HBC, and I didn't put the position back on. So a name that I'm watching to re-enter here, but really nice move after their earnings. Good shakeout under the 20-day hammer candle, and now back above like the recent rally point highs. MP ended the week up 4.8%, a little bit of weakness on Friday, down 3.2%, but on lower volume, kind of opened at the high, closed on the low, right at the 10-day moving average. Still a name that I'm watching for a pullback back into the gap zone, just below the 20-day moving average as a higher low in this flag. Not doing anything wrong in my mind. Reddit finishing the week up 3.7%, basically flat on Friday, so good relative strength compared to the Nasdaq and even the S&P 500. And one of the few names, and I know I say this like every video, but one of the few names that gapped up on earnings, and instead of rolling over, we saw really, really strong accumulation and follow through volume and price action. We had a green line breakout earlier in the month, August, I think it was 13th here. So green line breakout into all-time highs. From there, we had a pullback into the 20-day bounce there, couple like 3 day bounce into the resistance gap. We saw sellers take over there. And now we're just consolidating between the 20-day and this resistance gap. But like the close on Friday back through the 5 to 10 and still above the 20-day. And I really like the action on Thursday where we had like ugly reversal on Wednesday, tested the resistance gap, reversed, closed on the low of the day at the 20-day moving average. And then instead of following through to the downside, we got a gap up and an accelerated move right back through those moving averages back into that resistance gap area. So whenever you have a really ugly close, either at a key moving average or ideally below a key moving average, followed by a gap up that doesn't immediately give back those gains, if you just go back through past market leaders and study the price action, you'll notice that this kind of combination, ugly close followed by a gap up and strong action, tends to reignite uptrends. So hopefully that is the case for Reddit. SoFi, just a monster stock, and in fintech, XLF, the financial ETF, is acting well, consolidating just above that 5 day moving average and previous breakout point. Volumes pretty normal. Still closed over the 5 day moving average. A little bit of weakness on Friday, down 1.9%, but finished the week up 2%. I love the consolidation over the 5 day here, and this is one of the stronger stocks in the market. ALAB, semiconductor name. So with NVIDIA's weakness, which we'll get to in a second, it was makes sense that this was down on Friday, 3.7%. Love what it did though. Undercut the support gap, undercut the 10-day moving average, immediately responded to that area, bounced, and then closed right at the 5 day, and did so on less volume than yesterday's or Thursday's accumulation bar. So overall, great looking stock. I will be watching that 10-day and Friday's low as another potential like entry point on this one. Finished the week up 1.7%. NVIDIA down 2% on the week, down 3.3% on Friday. They had earnings after Wednesday's close. We see the volatility on Thursday's candle where we started with a gap down, immediately accelerated lower, rallied back through the highs, looked like it was breaking out, U-turned right back. So a lot of volatility on Thursday. And what you don't want to see after a lot of volatility is clean action to the downside, which is exactly what we saw. Big gap down under the 10-day moving average, lost the 20-day. It is consolation prize. We did undercut two support gaps and closed above that area, but not ideal action with lots of volatility on earnings, gap down, closed weak on a pickup in volume as well. Overall, the chart would be fine to me, even if it comes into the 50-day moving average and support gap at like 170 area. But we don't want to be losing the low of the pullback here on the 20th. So a couple areas to watch on this one. Can we get back over this gap down zone? The quicker we can do that, the better for the overall market, and especially for semiconductors and NVIDIA individually. Do we hold today's low? Like, can we gap up on Tuesday and then hold today's low? Or can we hold the 50-day moving average and support gap on further distribution? Futu, the leading stock in China, continues to consolidate well. We had a shakeout on Wednesday, kind of like a breakout retest, held that 10-day moving average on a closing basis, and then kind of just chopped sideways. Alibaba kind of stole the show on Friday, so a lot of money rotating into that name. Still like only down 0.3%. And I really think the China theme is one to focus on. We'll get to that with the industry ETFs. And then Robinhood, the weakest of the leaders this week, down 4.8%, was actually green on Friday, which is a little surprising given the weakness in the market. But just a name that feels like it needs a new base here. We've had an awesome rally from $30 up to $120 without testing the 50-day moving average once. But recently, after this shakeout on August 1st, we rallied into new highs. But instead of like trending and making continuous new highs, we got a distribution bar on the 13th, rallied right back up to that highs, another distribution bar on the 19th, followed through the downside. Great shakeout spot for like a good risk reward entry on the 20th on that support gap zone. But now this looks like a lower high. We had another distribution day on the 27th, and we're kind of wedging into the 50-day. So a key spot for me is the 50-day, but more so the support gap underneath it. Like a lot of people will have their stops at the 50-day, get stopped out on a shakeout. But really, like these two support gaps right around $100 or just under $100 are two spots to watch for me. If we lose that, like I'll take Robinhood off the list, replace it with something else, and chances are this needs like a whole new base. Jumping into the industry ETFs, we'll also sort this by price percent change this week. So we can highlight the leaders and then get to the laggards. MSOS, strongest theme of the week. This is the cannabis ETF, up 11.3%. I keep watching this gap zone below the 10-day moving average, and we didn't get there on Friday. So I don't have a position in this. Kicking myself for not trying to get in on the 10-day. That is probably the best entry point that I'm going to get. So left in the dust on this, but overall good action on Friday. Tested the 10-day moving average, rallied back, reclaimed the 5-day, and closed over that little support gap sliver, ending the day up 0.2% and the week up 11.3. The real story this week and kind of going into next week is gold miners and like metal and mining, any precious metals. Monster move here. Has been like a leader in the market for a while now. From the beginning of the year, it's basically taken off. Like put in the low of this pullback on December 31st, gapped up to start the year, and has just been on a tear. This is the gold miners ETF, has been on a tear since. We had multiple week contraction here where that allowed the 50-day moving average to catch up. We put in some higher lows, broke out on August 4th. And then when we didn't lose like the 10-day on a closing basis this entire time, I was feeling pretty bullish about gold miners. And then we get this ugly candle on the 19th. And this goes back to the ugly candle close plus a gap up and strong close the next day, usually reignites an uptrend. Here's a great example. Ugly close under the 5 and the 10-day moving averages on the 19th, close right at the low of the day on a pickup in volume compared to the previous day. And instead of following through to the downside, what do we get? A gap up, open right near the low, close right near the high, back through the key moving averages, and that reignited the uptrend. Now just surfing the 5-day moving average. Huge candle on Friday, up another 3%, finishing the week up just under 5%, closing right at highs. So monster move out of gold miners. NLR, this is the nuclear and uranium themes. I really like this combination of an ETF because it feels like when nuclear stocks kind of pull back, then uranium stocks take over and start to trend higher. Then when they need a break, nuclear stocks take over. So really nice double bottom base here. Shook out the 50-day moving average and like the previous shakeout low, rallied right back through those key moving averages with multiple gap ups, which another thing, look for shakeouts and then gap ups. Look for ugly closes, then gap ups. We had the shakeout under the low, one gap up, two gap up, consolidation day after reclaiming the 20-day, third gap up, consolidation day at the 5-day, a fourth gap up, And then we did kind of reverse on Friday after taking out the highs, but still over the 5-day moving average, acting really well here. So finished the week up just under 3%. XME, metal and mining ETF, new 52-week high. This might be an all-time high as well. Yeah, looks like it. New all-time high, just trending over the 5-day moving average, doing nothing wrong. Had a little test of the 20-day moving average in the gap zone, then continued on from there. So 2.7% this week. Another story that's, or another theme that's emerging is XLE and XOP, like the energy and oil and gas ETFs. XLE up 2.5% this week. We had this little test of the 50-day moving average, higher low. And then when we took out the 20-day, that really reignited this uptrend. We got through the 50-day, got through the 200-day, kind of came back, retested it on the 26th, and then just trended the rest of the week, closing right near the highs of the week and at the high of the rally point from market lows back in April. So good action out of that theme. IYZ right at all-time highs. Nice consolidation bar over the 5-day moving average, closed right at the high of the day. FDN, little consolidation day on Friday, down 0.7%. Still finished positive on the week. Great action on Thursday, and then bounced the 5-day, so not doing anything wrong there. ITA, this was the aerospace and defense ETF. I was getting a little bearish on this. It was the leading theme that brought us out of the correction. You could see really just clean accumulation, and then started to feel just choppy, heavy, loss of momentum beginning in July. And at this point on the 19th, I thought, okay, maybe this is going to roll over. We need a new base. But we undercut the support gap, bounced at that area, got in right at highs, and then just chopped basically the rest of the week. So as long as we continue to hold like the 20-day or even like the 50-day, I think this is, well, I mean, mathematically, it's still in an uptrend. So the more ETFs, the more themes that we have in uptrends, the better. XLF, financial ETF, new all-time highs. Really, really clean action this week. Never closed under the 5-day moving average, finishing the week up 0.8%. Cybersecurity, really good to see this theme and IGV, which we'll cover next, kind of come back into favor with the market. One of the first stocks or themes to come off the low, one of the first themes to start to correct back in July. And now it starts to look like it's working on the right side of this base, which is great to see. We had a like higher low test on the 20th with that shakeout, came through the 20-day moving average, another higher low, and then got going Wednesday and Thursday, reclaiming the 50-day. Friday or Thursday hit that resistance gap. Friday came back a little bit, closed back under the 50-day, but just looking for a lower high in this overall while we work on the right side of the base. Friday down 1%, week was up 0.8%. IGV, another theme that I'm excited to kind of see names pop up here. We had this downtrend line that we broke through a little bit on Wednesday, but really followed through on Thursday, back through the 10 and the 20-day moving averages. Lots of volatility on Friday, kind of tested the 50-day and resistance gap overhead, came back in and then tested the support gap, the 10-day moving average below, and settled somewhere in the middle. Overall, this is still like working on the right side of its base. So expect a little bit more volatility. We could even come back down to like the 106 area, put in a higher low, and we'll still be fine overall. But until you're like clearly on the right side of the base and you see volatility start to contract a little bit, expect some of these bars to make you feel like a fool if you were bullish one day and then bearish the next day. So still needs some time to work on the right side of the base, but it's good to see like so far the August 20th lows holding. XLB, not really a theme that I spend a lot of time on, but is above the 5-day. You got the 5, the 10, the 20, the 50, the 200, all in the right order. Only downside is the 200 still sloping down, but still acting great. Block, it really seems like a lot of the like crypto mining stocks are now just turning into data centers, which is good for the block ETF overall because cryptos are extremely weak right now, where data centers are taking over and we're seeing good valuations from them. Held the 20-day moving average on the shakeout on Friday, closed above the 10, right at the 5-day, finished the week basically flat, Friday down 0.9%. PEJ, the entertainment ETF, little gap down on Friday, closed right at the 5-day after a shakeout to the 10, closed the week basically flat. And you could see like Royal Caribbean at new highs, Carnival Cruise at new highs, a couple other stocks in that ETF to watch. Robotics ETF, little gap down, loss of the 5 and the 10-day moving average on Friday, little pickup in volume. Makes sense with like semiconductors. Finishing the week down 0.5%, Friday down 1.4%, still above the 20-day, and really just want to hold like this pullback low for an overall higher low in the structure. XLV continues to feel like healthcare has finally bottomed here. And what does it typically need to bottom is a gap up after a shakeout. So we saw some pretty volatile action August 7th, then we gap up August 8th. You really don't see trends reverse until you get a gap in the opposite direction. So we got that gap up on the 8th, followed it with another one on the 13th. Very quickly, a gap up through the 50-day moving average on the 15th. Get our extension on the 22nd, pull back to the 10-day support gap, bounce there, and then great action on Friday, getting back over the 5-day, closing at the high of the day, up 0.7% for the day, 0.5% down for the week. XLY closed right at the 10-day moving average, little distribution on Friday, down 1%, closing the week down 0.5%. KWEB, this is one that I want to spend a little bit more time because I still like there are no more beautiful bases out there that we haven't seen broken out outside of like biotechs. And then I would say KWEB. This is the Chinese internet ETF. Alibaba had earnings on Friday, crushed it. Price action, I think it was up like 12%. It's one of the long setups that we'll cover in a second here. But for 3.5 years, Chinese stocks have been basing. And now we're starting to see like massive blue accumulation bars, distribution on lighter volume, massive accumulation bars, massive accumulation bar, little distribution coming back in. We're right at this breakout point. So we could be having a false breakout, like uppercut fail, and then we should see this unwind very quickly. But the action out of all of the Chinese names like does not make me feel like we are going to fail this breakout. So little gap down on Wednesday, accumulation right around the 20-day moving average, and then gap up with Baba's earnings, reclaiming the 5-day moving average. And definitely a theme that I would be focusing on. TAN solar ETF continues to just flag out between like the 5 and the 10-day moving averages. Little weakness off the highs from Tuesday, but honestly, like I don't think this is doing anything wrong. Solar stocks have been one of the strongest themes in the market this year, which is kind of crazy to say because it was so weak in April, and then it took a while to reclaim the 200-day moving average. But once we had that bad news on the 17th, where the tax credits weren't going to be included in the bill, and we didn't accelerate to the downside, that was your sign that hey, this theme has bottomed. Now we need to start focusing on the leaders and closing over the 5-day moving average, especially the action on Thursday where we get an ugly close on Wednesday under the 5-day, and we follow it up with a gap up. It's a great sign overall, but like whenever you have the 200-day like just starting to slope up, you still have to expect a lot of volatility in that name and that theme. And solar stocks as a whole has been in a monster downtrend since like 2022. So just since we bottomed, like we should expect a lot of volatility in the theme overall. But now that we have the 200-day floating up, we've got the 50-day and a nice clean uptrend. The price action should get a little bit cleaner at this point. Semiconductors down 1% for the week, down almost 3% on Friday. We had great action earlier in the week, getting back into this resistance gap, but now this looks like a lower high because we have a gap down, open on the high, close near the low of the day on Friday, back through the 5, the 10, the 20-day moving averages on a huge volume. We definitely don't want to lose the 50-day or the support gap. Another spot that I would watch for is August 20th low. If we lose that, this really looks like it needs like a full new base before we can trend higher. Biotech ETF down 1% for the week, really just consolidating around that 10-day moving average. Another like theme that because the 200-day is still sloping down, we should expect a lot of volatility and not like as clean of action. But chances are this has bottomed. And with XLY, the healthcare ETF, looking like it's bottomed, hopefully this can get pretty directional to the upside. I'm saying that because I do have a position in LABU. Um, but I like the action on the 25th was ugly. The rest of the week was pretty clean. But hopefully from this consolidation, we can start to get directional here. Otherwise, I need to cut LABU and focus on some software names. XRT down 1.3% on the week, was looking really great coming into Thursday with another gap up, made a new 52-week high and actually like a multi-year high on Thursday. But we opened right near the high, closed near the low, gapped up on Friday, then followed through down, losing the 5 and the 10-day moving averages. Spot that I'd be watching is the 20-day and the gap zone at 83.25. Home builders, not really doing anything wrong. Little pullback, tested the 10-day, tight action on Friday, finishing flat. This is another one that, like, you just zoom out a bit. Once we bottomed, look at how aggressive the the stock or the theme was accumulated. Like massive accumulation bar on August 1st, or sorry, July 1st, on July 22nd, August 1st, August 14th, August 22nd, and any kind of pullbacks that we're getting, while you might feel are volatile price wise, volume wise are very subdued. And this is another one with the 200-day just starting to flatten out, and then the 50-day kind of having that golden cross back through the 200-day. We expected a lot of volatility through here, and now we should see volatility start to tighten up, not on like a 1 or 2 day time frame, but like overall, we should start to see like daily bars on the downside start to tighten up, which is what we saw last week. Like on some of these pullbacks, you could feel pretty foolish, like trying to get in, like buying on strength, which I still wouldn't do because the 200 days sloping down or flat. Um, but we're starting to see that volatility tighten up, which is a good sign for a new uptrend. IYT transportation ETF tested the 20-day moving average and support gap, bounced at that area, reclaimed the 10-day. Overall, just kind of trading in line with Uber. And then XLP, good day on Friday, up 0.7%, right back to the 200-day moving average, but pretty weak overall, down 2% for the week. Not really a theme that I focus on because what is this? Like, this is just choppy mess, a lot of slop. So, not really interested in that theme, but it's one that I keep on the watch list. Before we get into the long and the short setups, do want to go over some positioning. So NAAIM, I covered this on Thursday, but this is the active investors exposure index. Once you get over 95%, that's when I get a little bit wary, because if everyone's already long, who's else is left to buy and push the stocks up? And we got to 98% last week, and we saw a decrease from 98 to 92, still elevated, but not over that 95% threshold where I use it as a signal. We don't have anyone that has like negative positioning or short positioning. And the 25th percentile of like everyone that reports their positioning is 90% invested. So still pretty heavily invested on the long side. While we're starting to see just distribution on the NASDAQ, this data is collected as of Wednesday's close. So a pretty good snapshot to use, and a little concerning. Like again, not over 95%, so not like warning, but we're right around there with pretty heavy exposure, with the Nasdaq and semiconductors not acting great. So kind of a warning sign, just to keep in mind. Like if things start to break down, don't fight that new trend. Like we might need some quality bases. Seasonality too. September, I've only had one profitable September in all of my trading. That was last year. So we've had an incredible run. Like look at this S&P 500 chart. We've had an incredible run. If we need some time to base and we want to use September seasonality for that, and we're pretty heavily exposed and semiconductors are breaking down. Don't fight that downtrend. Just like take your stops, take a little vacation. Um, but for the time being, I'm still seeing plenty of setups to the long side that I'll trade. Just a little warning there. Taking a look at the COT data, commitment of traders. Now, this data is collected as of Tuesday's close, so it doesn't include Wednesday's trading. Um, E-mini futures, so S&P 500. I just look at this red line to see positioning, and really, this doesn't give me any signal. It's basically flat here. So positioning on the S&P 500 is long, but it's not aggressively long where we expect, like if everyone's already long the S&P 500, it can't go high, like, well, it can go higher, but what's left to push it higher? Positioning on the S&P 500 is basically flat. I could still see the S&P 500 trending higher because we still have plenty of positioning room to the upside. Before I jump into the Russell, let's take a look at the NASDAQ, which tells a different story. So the red line is commercials, the green and purple line are speculators. And you can see the red line to offset the green line is very short, meaning speculators are extremely long the NASDAQ. And while we saw the large speculators kind of tick down their positioning, the small speculators bought it back up last week. So overall positioning is extremely long the NASDAQ. And if everyone's extremely long the NASDAQ while semiconductors are starting to break down and NAAIM exposure is elevated and seasonality September is pretty weak, kind of a recipe for some volatility and maybe just some basing, maybe a downtrend. So that does kind of warn me a little bit where like I don't want to be putting a ton of exposure on semiconductor names or other like mega cap tech names. I want to be focused elsewhere in the market, maybe like China. And then Russell 2000. So this was super short a couple weeks ago. That has unwinded quite a bit over the last 2 weeks. So it's not as like everyone's not as short, but they are still like positioning wise still short as of, let's see, they're as short as they were back in July, not as short as they were a couple weeks ago. We're starting to see that unwind. And if we take a look at like the indexes, the Nasdaq over the last 2 weeks, like Nasdaq exposure has been super heavy on the long side, and we saw all of August lots of volatility, but really no price appreciation. Where if you take a look at IWO, super short positioning, very clean uptrending move. So it doesn't mean like this is a secondary indicator for me. It doesn't I don't see this and say, okay, everyone's long. That means like no stock can go up. No, I'm still trading stocks to the long side, but I'm focusing on different parts of the market, small caps, China, home builders, biotechs, a couple software stocks that are like smaller companies instead of focusing on like the Nvidias of the world. And then we are still in earnings season, so I want to highlight that. Speaking of Chinese stocks, NIO reports after the or sorry, before the market opens on Tuesday. Other stocks that I'm interested, Zscaler Tuesday after the close. Wednesday after the close, we have CRM, CRDO. Not really interested in AI. Let's see what else. AVGO after the close on Thursday. Lululemon, sorry. DocuSign, Path, IoT. I completely forgot about IoT and BRZE stocks, but they report after the close on Thursday. So just know if you're going to be trading a stock, when do they report? Have they already reported? So you don't get blindsided there. All right. Finally, getting into the long setups. I actually found a lot of long setups, and this does happen to me often where I get a bunch of long setups after we see some price contractions or pullbacks. And when that happens, like when I really struggle to like narrow down the long setups on my watch list while positioning is pretty heavy, it tends to be like a do or die spot for the market where if all of these like lower high contraction patterns happen, they can break to the upside and we can get like another leg higher. Positioning can get even longer, Or all these like lower high patterns, contraction patterns can start to break to the downside. And then you see just a wave of like distribution just across the market and like a lot of downward, sharp downward action. So I always am a little bit wary when I get or I feel super bullish because there's a lot of setups, but it's later in the trend. Positioning is still pretty heavy. And yeah, so sorry. Just getting into this. Tesla, ugly day on Friday, did stop me out. I had a position from like 340-ish area. Stopped me out on Friday. This goes back into the ugly close followed by a gap up and strong action. A setup that I took with like RBRK last week was this ugly close on the 26th, gap up. I bought the opening range break. We had follow through on Thursday, uppercut the resistance gap and failed. So ugly action on Friday, but really good risk reward buying that gap up after the ugly close. Same idea is going back with Tesla. We have multiple months of contracting. We've got the 200-day, the 50-day, all right on top of each other. Now we have an ugly close that probably stopped a lot of people out, myself included, on Friday. So if we can get a gap up on Tuesday, that would be buyable versus either the low of the day on Friday or the 200-day, like right around that 329 area. Something that I'm watching to reignite the uptrend because we still have had like higher low, potentially higher low. So the ugly action on Friday isn't out of character for Tesla or for a stock that's building a base here. So now we're looking for a gap up on Tuesday. Or what would be even better is like an ugly close under the 200-day on Tuesday, followed by a gap up on Wednesday. That would be awesome because it would shake out even more people that use the 200-day for a stop. Palantir, I was short this earlier, covered most of my short on the 20th, and then the rest of my short on the 26th. Now this is kind of feeling like a long to me, but is another one of those stocks that are in a do or die spot. So we come into the 50-day, like this is just a ton of volatility. Like that's obviously ugly. But then we bounce, and then on a closing basis, so at the end of the day, when institutions have to finish up their positioning, they keep holding the support gap zone and the 50-day moving average on a closing basis. We have not closed under either of those. On Friday, we had great relative strength compared to the rest of the market, where this was only down, let's see, 0.9%, closing over the 50-day moving average, closing high in the range, while the NASDAQ closed right near the low of the day. Semiconductors closed near the low of the day. So good relative strength. We're holding the support gap. This is still like the first test of the 50-day moving average. So looking for like a higher low test of the support gap right around like 154 as a potential buy spot. Stop would be Thursday's low. If we get close under the 50-day and under the support gap, this very quickly flips to a potential short for me. So another setup that's at like a do or die spot. You could trade it in either direction. I wouldn't argue either way. But for me to get bearish on this after multiple tests and hold of the support gap and relative strength on Friday is a close under the 50, is a close under the support gap here. Alibaba, monster base. So let's go to the weekly chart on this. So 3.5 year base, working on the right side, some weakness in American stocks, like the mega cap tech, and this just exploded on earnings. Open near the low of the day, close near the high of the day, up 12, almost 13%. Just using the high volume close as a potential entry point. So if we gap up on Tuesday, say Neo has good earnings, we gap up on Tuesday, come back into that closing price, that's a spot that I would buy and then manage risk like 2 or 3% there. But I do think that this is a start of a new uptrend for Chinese equities overall and in BABA too. SOFI, going back to the leaders list, one of the strongest stocks in the market. We took a look at that XLF financial ETF, super strong, making new highs there as well. So we have the theme behind us. Just looking for a test of the 10-day moving average and this gap zone right at 25. So an undercut of $25, undercut of the gap zone, undercut of $10 or the 10-day EMA, and the pullback low would shake out a lot of people, but really all that would be doing is a breakout retest, and then reclaim of that gap zone would be my entry, stop would be the low of the day. OKLO, good action last week. We had a beautiful, beautiful undercut of the 10-day or undercut of the 50-day moving average. Gap down, follow through on the 20th, undercut the support gap. And this is why I draw the support gaps because they're a great secondary spot to watch after a key moving average is undercut. Literally like a couple pennies, undercuts the support gap, immediately responds to that area, showing buying support. We had a great move through the moving averages, and now we're coming back in for a potential higher low. Just looking for an undercut of the 20-day, the support gap low. Reclaim of that would be the entry. Stop would be like 3% or so. Ideally, like this happens later in the week where we have the 50-day starting to catch up, but I still don't think it would get close enough to use that as the stop. So I would be using like 2 or 3% there. NBIS, I have wanted in on this name for a while. I did not chase it on the 22nd or the 25th here. Rallied into the resistance gap, still sellers there because on a closing basis, we could not close over that gap down zone. We gapped down on Friday, closed near the low of the day under the 5 and the 10. Now I want to see the selling accelerate to the downside, lose the 20-day, lose the support gap, lose the high volume close from, I think this might have been their earnings, but shake out that area. Then a reclaim of the HVC would be my buy point. Stop would be the low of the pullback. RGTI, awesome action on this at the 50-day moving average and support gap. So this is kind of what I'm thinking with the Palantir setup is like you get into the 50-day and you have a support gap, but you can't close under either of those areas. And then eventually, as the market bounces back, this U-turns really strong action back through the key moving averages. Now we're looking for a higher low undercut of the 20-day, right around 1540 as that potential undercut and reclaim entry. Stop there. I would still use like a 3% stop on this name. But overall, just a beautiful, beautiful like weekly chart. If we go to the weekly, does not get better than this. Huge move from 81 cents up to $19, $20 back in December of last year. And has just spent the rest of the year kind of consolidating, really tightening up here. And from contraction comes expansion in one direction or the other. If you want to argue that this is going to break to the downside, I would say let's see that price wise. So far, we've just seen higher low, higher low, higher low, support action at that support gap. So to me, this has been a bullish setup. If you take a look at like QUBT as well, which is a name that I have a mental bias bearish for it, but price action is not confirming that. Like Bears had their chance on the 28th to send this lower. We were acting weak under the key moving averages. We took out Wednesday's low on the shakeout on Thursday, and then immediately responded to that area, reclaimed the 5 to 10, the 20-day moving average, closed well, tight inside day on Friday. Now you have a clean pivot on QUBT at 1617. So it just doesn't feel like that theme is ready to go away. So I'll be looking for a higher low pullback into 1540 as potential entry. ASTS, Rocket Themes, also one to watch. RKLB is acting great, just doesn't have like a clean entry for my type of trading. I like to buy on pullbacks more than breakouts. But really good response at the support gap twice here. Just looking for another test of that area right around 47.20. Stop would be right around $46 there, just a percent or two. But I like also like the setup where you test the 50-day moving average, you come back in, you put in a higher low, you let that 50-day start to flatten out, and then getting through that 50-day moving average is another like entry tactic that I use. One of the few entry tactics that I use to buy on strength is a higher low 50 pop setup, and that's what is setting up here, where you undercut the 50-day, you test it from the underside the first time, then put in a higher low, set a pivot, and then get through that. Lemonade Insurance, a name that when it gets moving, it really does get moving. Finally have a pullback tested the 20-day moving average. In a perfect world, we would get a ugly close on Tuesday under the 20-day moving average, followed by a gap up on Wednesday. That's really what I'm looking for to trigger this entry. Um, but people buy on strength all the time. Not my forte. But through 54.75, like the highs from Friday, that would kind of re-trigger the uptrend here. Personally, would be looking for an ugly close on Tuesday, followed by a gap up on Wednesday. UUUU, great example of when you get ugly action that immediately resolves to the upside, you tend to get explosive moves. And we had like a really nice pivot here. Looks like it was breaking out on the 18th, completely failed on the 19th with huge volume. But instead of accelerating to the downside, we had tight action on the 20th and then gap up, consolidation, positive day, gap up. Now we got extended in the short term. We're starting to pull back into the 5 day, consolidate here. I would be looking for a shakeout back to the 10-day moving average and gap zone low at 1094-ish area as potential buy spot. Stop would be under 1050, kind of like a breakout retest. PGY, this was my main focus on Thursday. Unfortunately, it gapped up and I didn't want to chase. Great action on Thursday, up 8.6%. Now we got a little extended and the market was a little bit weak on Friday. Still over the 5 day moving average on really light volume on that close. Probably my main focus going into next week is this gap zone and the 10-day moving average, a breakout retest of this name. If we zoom out on this stock had a huge gap down from $83 down to 37 back in 2022. So there are like technically this is a resistance gap, but this is to me like there's no trading in here. So there's no sellers that would really step in at this price. If we were to get up back like to 100 and say this happened, like this gap down happened like within a year, then I would be a little bit more like concerned if like once we got back up into that area because hey, everyone who like got trapped on that gap down now has the ability to sell. But if you've been holding this stock for 3 years, 3, 4 years after this gap down, I really see this as like breaking out into blue skies. So any pullback to that breakout retest point at the 10-day moving average and gap zone at just under $35, I will be looking to trade pretty aggressively there. SEDG wanted to put one solar name on there. There's a couple others like RUN that are catching my attention, but this is consolidating right under the 5 day moving average. There's this tiny resistance gap here. Once we get through that on a closing basis, I think this can just take off. So me personally, I'm not going to be buying this on strength, but I know a lot of people do. So just watch for a breakout into new 52-week highs here. XMTR, one of the leading stocks over the past month on my like from my universe list. Really tight action on Friday over the 5 day moving average. Just looking for a higher low retest at that 10-day moving average and gap zone at 47.50 on any market weakness as a potential entry. SLDP, this is more of like a speculative play. Same with like BTDR. Only trades about $45 million a day, so a little bit on the thinner side. But we have a pullback to the 20 day, little rally, lower high, good shakeout on Friday, back under the 20 day. And now this is one that I would look for a gap up, take out a Friday's high as potential entry. Stop would be the 20 day moving average on this one. And it does have like the ability to really move. It's gone from $1 up to $5. So after a little consolidation here, if the market doesn't like roll over altogether, this is a name that could be a performance booster for your account. I wouldn't be sizing it up like crazy because it is thinner, it's under $5, but I could use it as a performance booster. And then BTDR, massive consolidation here, like zooming out like multiple years. It has the ability to run, like it's gone from 5 to 2026. So it does have that ability to move. It's a thinner stock, $42 million a day traded, but look at how clean this consolidation is. You got the 200-day, the 50, the 20, the 5, the 10, all on top of each other. Just through that 1440 area is buyable, and then stop would be you'd have to size it down because the ADR is so high on this, or like buy on strength and then use the low of the day as your stop. Then on the short side, I got 8 setups. First is MSTR with Bitcoin's weakness. This has been acting weaker than Bitcoin like since July 18th, really. Position I do have short already on this, and I added to the short earlier this week. Just looking for a little rally back into the 10-day. Ideally, it could come up like into the resistance gap if Bitcoin gets a huge bounce. Not holding my breath for that because this looks just like a broken chart overall. But a little rally up to the 10-day. That's would be a spot that I would look to manage my risk against, like the high of this. But whenever you get a rally back into a key moving average, like the 200-day, and then you follow it up with a gap down that you don't immediately fill, that's just a sign that this was just a snapback and we're about to trend lower. VRT, this was on the short watch list multiple times this week. One of the semiconductor names that has really been weak since the end of July. We have this resistance gap down from earnings that we attempted to get over, failed, another gap down, a third gap down. Now on Friday, we had our fourth gap down off the highs. So tons of weakness in this name, already losing the 50-day moving average. Would be looking for like a bounce back on Tuesday, Wednesday into the 50-day, into that 131 spot to get short against the high from Friday. SEZL, one of the growth names that went on a monster move from 25 up to 180, then started to fall apart in July, kind of wedged up, and then huge gap down on earnings, down 34%. And instead of like snapping back while the market was strong, we've just kind of drifted higher. I'd be looking for this through Friday's low as the entry. Stop would be the 10-day moving average on that one. GEO, another name that has just been trash for multiple months now. More so, like recently, noticed this where we tested the 200-day moving average, failed at that area, closed near the low of the day, followed through on the next day, down another 6%. Little rally to the 10-day, and now I should have had this drawn. There's this little resistance gap here that we uppercut and failed on Tuesday. Looking for another rally into the 10-day, into that resistance gap zone at $21. Uppercut and fail as a potential entry there. DFDV, we've just seen tons of weakness on this name. Had a move to like $52, then lower high, lower high, lower high, gap down, lower high. Big move up, followed by a even bigger gap down. That usually signals a trend in the opposite direction. Weakness on Friday, just looking for follow through on Tuesday through today's or through Friday's low, stop at the 20-day EMA there. ZEPP has been a monster stock. I think this probably still does have like a couple more days before it's ready for a blow off top, but we are starting to see volume pick up as price gets there. What I would love to see is gap up on Tuesday, strong bar like we saw today, gap up on Wednesday, and a ton of volume come in. Then I would start to look for like a loss of VWAP as a potential short versus the high of the day. In a perfect world, this like gaps up Tuesday, goes gap up Wednesday, goes highest volume ever on Wednesday. Then we look for a gap up on Thursday to really, really skew the risk reward in our favor. Because this like so far, this is just expands to the upside, consolidates on lower volume, expands to the upside, consolidates on lower volume. So until we get like just overwhelming volume and overwhelming price action, like we did with NEGG recently, I still think ZEPP has some room to go. But with like NEGG as our example, we had that pattern of uptrend with overwhelming, like good volume to the upside, contraction on low volume. When it started to change is we had a gap down that we kept trading in on heavier and heavier volume, but without price appreciation. And then once we closed under the 5-day after that test, you just had so many people trapped at this $130, $140 range that there was so much fuel to the downside. And this has fallen from 135 down to 45 in 1 week. So kind of a similar setup that I'm looking for ZEPP, but it's not there yet. We don't have like we had a gap down zone here, right there, but we took it out on Friday. So everyone who had been kind of getting trapped at this price, we didn't close under the 10-day moving average. We didn't accelerate to the downside yet. And we took that out on Friday so we can eliminate that resistance gap zone. Now we're looking for other signs of weakness before we step in front of this in front of this train because it can move on you. 18% on Friday. DXYZ has been a trash stock for all basically the entire year. This has been on the short watch list plenty of times. Just another test of the 20-day moving average on Wednesday. Open on the high, closed on the low, so resistance gap still intact. On Friday, we had a little gap down. I'm just looking for a test of that gap zone at 28.26, and then using the 20-day EMA and the top of, or so the sorry, the bottom of the resistance gap as my stop. And finally, ARQQ. Lower high rally into the 20-day EMA. Ugly action on Friday, closing at the low. Another name that I'm just looking for a little bit of a rally back to the 10-day moving average and Thursday's low right around that $31 area as my entry. Stop would be the 20-day EMA and Friday's high. So that is going to be the weekly prep video for September 2nd to the 5th. Hopefully you guys enjoyed the video. If you did, leave a like and subscribe to the channel. And a reminder, we are doing a Memorial Day kind of promotion where you could try out the Discord for $30 for 1 week. And then if you like it, sign on for the monthly and the yearly option. Hope you guys enjoy the long weekend. I'm going to be putting out another video either on Sunday or Monday. And then we'll get back to the daily recaps starting on Tuesday. Have a great weekend and enjoy your time.